I think the SME sector's concern is basically the accumulated interest during this period. And you see the reality, if you did the reality check in that chart also, inflation has come down, but the cost of living remains same. So none of these businesses are able to give a proper, restructuring plan to the bank because their businesses are dead and they don't see a way of recovering. So the request they have is basically to see what kind of a concession the banking sector can give them on this accumulated interest, which was at a very higher level when their businesses were not operating. And they are even willing to pay the original capital amount, but what has happened now is the original capital amount has become two times more than what they borrowed. So this is a problem which is out there. Maybe it's not on the street set, but there I got some information saying 154 people committed suicide, which is not a confirmed number. But the thing is, there is no way that they can go to the bank and present another feasibility to pay back that accumulated interest. So I don't know whether there's a solution or not, but that is a concern on the table, because all these adjustments and stability has happened, and we are very happy as a country. We should be happy with all those things, but the aftermath of the last few years is still people prices are high on their the buying power, and also the SME sector has no solution to provide to their own banks to say how do we restructure, because there is no solution given by the banks.
Yeah, I think,
Mr. Gaur, before you answer, in fact, I asked for today's Financial Times. The headline is also that. And also, there was a proposal by the government that these restructuring needs to be done by the banks. And in your answer, Governor, please let us know what the current status is on that, whether banks are going to stick to those demarcations made by
there's no favorable response, because I have under our ministry 187 approved letters given to those businesses to making them eligible for another working capital loan and get restructured. Thus far only 5 has got it since last year. So we will really have to look at it as a country.
So the ongoing concern is
still there.
Yeah, so let Governor answer, sort of taking into consideration all these questions on the SME sector.
Yeah, I think first point I want to make is we certainly recognize not only SME, even all the businesses, enterprises had an impact on that interest rates. There's no question about that. That's obviously the purpose of tightening monetary policy, preventing a crash, is to basically control the demand. So that's the only instrument we have. So that's how economy came to this kind of stability as a result of this action. Obviously, there are effects of that to the whole country, not only SME but everyone else. With the inflation, poor people, everyone had an impact on. Still, cost of living is not, income is not up to that level. So everyone. So then, what are the instruments that central bank has to target specific kind of a sector of overall economy? So we had in the past, under the early act, there was a provision under the early act. We have what they call credit lines, administrative credit lines. Central bank also had a provision to provide target SMEs, women, all this, getting funding from Samya, ADB, World Bank, and we administer even from central bank funding. We had this facility. We were doing that in the past. That's why people's expectations still, central bank can do something on the sectoral credit. But right now, with the new banking, Central Bank Act, is basically looking after sectoral, tourism sector or the housing sector or SME sector. I don't think central bank from the monetary policy, there's no instrument at all. We are using interest rates for the whole economy, irrespective of the SME or everyone. That's the first principle. Secondly, the banking sector. Our mandate for the banking sector is to maintain a secure financial stability. on behalf of the depositors, protect the depositors and maintain financial stability. So while maintaining financial stability, obviously we had that kind of period. Banking sector was under severe stress and almost touch and go banking crisis. That's why if you all can remember the concern of the domestic debt restructuring of the banking sector would have collapsed the banking sector. So that we prevented that. I mean, this is a recommendation also. We recommend don't touch banking sector because there could be a collapse. End of the story, it will waste everything. So then now our mandate is for us to secure banking sector stability, maintain stability and financial intermediary even for SMEs others is essential. Good banking sector is in the country. So then obviously we as much as possible we have been asking banks even for their interests, people who have found difficulty during the crisis, and give them as much as possible the relief, restructure, extend their loans to the extent that they can recover. So they are recovering the depositors' money. They have a responsibility to protect depositors' money. That's how that's their mandate. So as a result, we had several. One is East Sunday attack. There's a tourism sector long moratorium. Then up to 2023, there's another moratorium extended. All I can say, all the moratoriums, there's no single cent came from the taxpayer government to provide those relief. All the cost of these moratoriums, interest adjustments, came on the depositors' interest. So who paid that? Who paid for the relief that was provided for 2019 to up to now, restructuring debt obligation, adjusting interest rates, were borne by the depositor, the pensioners, everyone. That's how people are now still complaining interest rates are not sufficient for their savings. So we have a
Sorry, Governor.
mandate.
You
Sorry.
said that was taken by the depositor, but the moratorium, the borrower is the one who paid for it. No, he had extension.
Borrower
he had to pay
borrower paid at a low interest rates. That low interest rate was charged from the depositor.
No, but there's accumulative interest also, no?
Sorry?
The borrower is still paying.
Yeah,
The
you see, the question is here, when the interest rates are going up, banks are paying 25% up to for fixed deposits for the savers. Inflation was 70. They were getting only 25%. So once banks has already paid the interest, now bank can't go and ask. So we paid the interest. Can't you give it back, or can't you make a low interest for them to give a benefit to borrowers?
But Governor, that's in the bottom line already.
What's
That
the bottom line?
period, the banks, the bottom line has doubled during this period.
No, I mean, if you look at 2023, obvious 2020, both those 2 years, in fact, there's a concern, one of the bigger banks will report a loss in quarterly basis. If there's a bigger bank reported loss in quarterly basis, that will erode the confidence of the bank. People will start withdrawing money.
That was going to the apportionment, because they
Sorry?
were looking at a foreign exchange hit. That was two banks on apportionment, not on profitability, not on the bottom line.
No, I mean, I think
That
we can't share, these are some market sensitive information. We know as a regulator how critical and how crucial some of the banks are trying their best to report at least a small profit. Because if there's any bank quarterly basis reported a loss, that will trigger a lot of other things for their corresponding banking and all other activities. That will trigger a confusion of the system. So this whole argument is banks are making a lot of money. That is basically what you see when you look at the gross numbers. But you look at the return on equity of investment in the bank, is average 13%, even historically came down to 10 to 11% during the crisis period. Now recovering back to 13% now. So when you have the risk-free investment on treasury government securities giving 5 to year 11%, return on equity of a risky business, even in a bank, is around 12-13. I think if you comparable basis, this is obviously you can look at those numbers. We can see huge profits in billions because business is bigger. So this is not what we need to compare. I mean, this is whole idea. I mean, we have all sympathy for the people who have been affected during the crisis, not only SMEs, everyone. So our instruments, we can do best to bring down the interest. Now market rates have come down. So for the past, if there's any concession, obviously there are several ways that they can be provided support. That has to come from the relevant authority. For example, if the government is willing to say interest subsidy, for example, senior citizens 15% was given, when market rate was 8, the gap was provided by the government. That's a subsidy.
That
There's
really
no
is
fiscal
that,
space for
that really is the issue. That is the government will have to sort of what now we are. It is very clear that the monetary policy board. I'm assuming you're speaking as the chairman of the monetary policy board, the governing board, right? Your board is saying, look, there's nothing we can do about this. We are unable to sort of pick SME or hotel or something else.
No, we are trying our best to at least ask banks to give them to the maximum, because that is good for the banks. So if people are asking, no point of banks having large amount of stage 3 loans. I mean, if you look at numbers, NPLs actually peaked last year. Now it is gradually settling down. So this situation is now easing compared to where they were earlier. But you see here, the point is that I don't think we are asking them. That's why we even issue circular within the provisions of the law. We have given them. But if we can't give interest rate directions, please give them cut this interest, cut this issue in the loans at this rate. Then someone will have to finance that.
I'm looking at today's Financial Times headlines. Let me just read the first para. The economy's backbone, the SME, this week renewed their serious concerns and lack of effective support for their viability impacted by successive crises and policy missteps. What they are saying is that, nothing they seem to have got. Now, a directive that there is, and I got a copy of that, is if your loans are less than 25 million rupees, you get a 12-month period to come up with a restructure, 25 to 59 months, and if it is over 50 million rupees, 6 months. I mean, is that working? But what the Honorable Minister said is it is impossible for them to sort of come up with a restructuring plan. What really is going on? Because your monetary policy, their fiscal policy, we are oversight.
No, I think even this circular, Chairman, if you look at, I have thankful for the government. This time, there's a good consultative process. So we had discussion on the same table, SMEs, Bankers Association, our regulator, Director of Bank Supervision, and also the Finance Ministry. And I think this minister was also involved there. So with the consultation, this is what all parties agreed, the feasible solution. From our side, this is solution. From their side, this is what they asked. On that basis, because it's not, we can't impose anything, because banks have agreed to provide this 12 months, 6 months, because the understanding was that below 25 million stage 3 loans, 99% are below 25 million that in that bracket. That's why it was given a 12 months period in consultation with the banks. So we agreed and we issued the circular on the basis of agreement. I think that is where we had done the maximum what is possible, also taking care of balancing the interests of the banks.
I think, Governor, this conversation clarifies a very good place where the SME sector can also now know that the central bank has a limited ability to do anything about it. So that's out of the way. And then we have to collectively see how do we use the funds or the concessions given by the government, whether the banks are openly willing to renegotiate this. I think that is, you have already given a place to inquire as well.
Yeah,
right?
exactly.
So we will also push that, but the thing is the reluctance is still there.
No,
so
we will certainly pushing banks.
Yeah.
Based on circular, we will be pushing them.
So we'll collectively work together to get this.
And one thing I would like to add here from the government side, and one supportive action is to activate this credit guarantee scheme, where there's a guarantee by someone, by the guarantee institution, so that banks can at least go a little beyond what they can go, because there's someone guaranteeing the obligation.
I think banks, with the scheme, banks will be willing to lend, the request from the SME sector is to waive off the interest. That's where the yeah. So the banks has to take it actually.
No. Its question is that it's not banks. It has to be taken by the depositor. Ultimately, that ultimate burden will go to the depositor. That's the bottom line.
Now it's a tight situation, so we will have to go through each individual case and discuss.
Yeah, that we can, and also
Can't it
the
be sector-driven lending?
That is
No,
why he
they
said he
cannot
can't.
do that.
That's why he says they can't.
Previously and.
Okay.
No, they can specify certain, the
No, we
finance
can't.
minister also can, they can lend sector-driven.
Yeah, so before I come to Honorable Senasing has a question, I'll let you ask. What is the question?
sorry, one more information on the SME credit, we have that information also we brought in. So if you look at the recent credit growth, there's a reasonable amount of credit has already gone into the SME business based on the information. That and also if there's any adjustment in their existing stock, then new borrowers will have to pay the price. So, for example, either you charge from the depositor or you charge the premium from the person who is now willing to do the business and willing to take the credit.
It's a PL and NPL.
Yeah.
So last year also there was a credit line given by the government 20 billion, 15 billion for PL and 5 billion for NPL. The 15 billion went 97% granted.
It's very small.
Yeah,
Compared to
and the
demand,
5
it's
billion,
small.
only 4 loans have been granted. So
Yeah.
similar scheme is there now.
I mean, so this is really a good discussion because there are limitations, and you need to know what your responsibility is and what is their responsibility. Yeah, so I mean, this is the thing. The ball is in, unfortunately, the government's court on this one. You can't, so you will have to find some other non-monetary policy driven decision to help the small and medium enterprise. And that is where the buck stops.
But Chair, the thing is the collective responsibility. Now we have gone through this, and even on this particular topic we were in, just one point that I want to add. Now when you really look at these two institutions trying to control inflation and to say it's my responsibility to control inflation, it's not your responsibility to control inflation, and I don't have tools to do it, and your tools are making my job difficult. That's what I'm hearing. So isn't the interest
tools.
right?
You have tools.
No. The thing is,
You have to use your tools.
The fiscal and the monetary has to work on this particular point, right?
Certainly,
I think it has to be a collective responsibility. I know its act has made it, we have departed, but as a country, if you really look at it, it's a collective agreement. If you have to bring it to 5% or whatever the target rate, both parties has to use whatever in their leverages to kind of get there, because otherwise central bank will always come here and say we missed the target because government has reduced
That is
the
No.
Just to follow up on that, Governor,
Yeah,
I mean,
please.
like the Honorable Member earlier said, the government will work on bringing down the prices, and that will be because supply side bringing it down will be the policy of the government, definitely, right? So then, has that been factored in the future
projections.
inflation targeting projections? And
Yeah, what we have factored in the cost recovery pricing for electricity and everything. So that's cost recovery has a lot of uncertain factors. So basically, cost recovery is if there's a better rain, then cost of price will come down. If there's a high energy prices or low prices, that will
but
have.
have you considered the government policy of bringing down the utility prices? Because that's the government policy.
Because
I think that, for example, if you can tell me how government can bring down the prices continuously.
I'm just asking you whether you have.
No, we
factored
have
in-
not. So
you have not
basically,
factored in that
no.
policy.
We have factored in government policy of cost recovery, but I don't think it's realistic for any institution to
then you'll run
assume
into the
government
same
can
problem.
continuously bring down that level of prices.
But don't you
By-
think you'll run into the same problem in the near future if that happens?
No, I'm saying maintain inflation 5%. Bringing down price levels but then you are supporting the deflation. So bringing down inflation from further is exactly deflation. So if you want to bring down inflation back to 5%,
No, I'm just asking you whether you have factored in the government policy when you make the inflation. That's
Of
all
course.
I'm asking. Yeah.
I think that just to answer the honorable members' question, also the coordination, that is where in the act, we have a strong coordination mechanism in 3 ways. One is the coordination council chaired by the governor and ST. We are supposed to meet once in every 3 months. We certainly communicate, have this same discussion at that meeting, but we don't want to make it public. So we have very strong debate and discussion between Minister of Finance and us on the coordination, on the inflation, whether we can possible, what's the impact of your action on our, and what's the impact of our action on your fiscal. That discussion is taking place. That is on the coordination of monetary and fiscal policy. In addition, there are crisis management committee. There's a FSOC. There are several provisions for coordination with the government and the Minister of Finance. That we are very much into coordination with fiscal and monetary policy, but we don't want to get into fiscal area. We don't want them to get into monetary policy. That's the understanding that we need to have, respect each other, but have a strong coordination.
You know, that is when Mr. Govindasamy was sitting in the second row, I asked him to come and sit in the front row. He said, but the name board says Secretary of Ministry of Finance. I said, he's not invited. That's the answer to your question. Because let us draw a line, we don't want fiscal dominance of monetary policy. Why we went wrong for the last so many years was fiscal dominance of monetary policy. Because any elected government must have has an obligation to fulfill the promises they give to the people. So they want to spend on infrastructure, they want to give credit to small businesses, etc., etc. But then if those impact the monetary policy and then direct the monetary board to accommodate those expenditure, that is when it gets out of hand and becomes uncontrollable inflation. So at some point...
But doesn't
But Chair,
monetary
the central bank or the independent central bank has no goal on growth.
No, it doesn't, except to facilitate as a secondary objective.
And
No, it's
doesn't-
not there.
No, it is there.
And doesn't monetary
It is
policy
there.
already look reactive? I mean, that's...
No. Monetary board's primary objective is price stability and financial system stability. Then as a secondary
Then we should
supportive
review
board...
that also.
Yeah, secondary supportive, where is that in the, what is it, what is the section? Section 5. Here it says 6.3, 6.4, in pursuing the primary object referred to in subsection 1, which is price stability, the central bank shall take into account entirely the stabilization of output towards its potential level. So that is actually there's a double-edged sword there. Because what is the potential output? And then you create an output gap. Then you say, look, I need to fill this output gap. So therefore, I'm going to reduce interest rates to make it more accommodative. That will go the other way and then hit interest rates and inflation rates. So it's a very difficult task. But as for your question, Honorable Minister, it is there.
Chairman, on this score, now you said 5% when the honourable member asked the question. What do you think is on in India? 2%?
There's 4%.
Sorry.
4%.
So on that score, realigning that may be a look that is there. And now, if now we have missed 3-4 quarters, how long more would you take to get back to order?
So
If you don't, then what is the ramification?
No, this in our estimate, as already shown, we think third quarter
25
will
September.
this year, third quarter will get back to 5%. Now concern is whether the worst one would be to exceed the target. That's pretty bad. I think moving below the target for the time being, as I said, I think what government objective is if there's reduced prices, inflation is reducing prices. That's already happening.
අද නිරීක්ෂකයෙක් හැටියට ඇවිල්ලා ඉන කබිෂර් මැතිතුමා මගෙන් අහුව ප්‍රශ්නයක් අහන්න මම ගැටලුවක් නැහැ සේමසිංහ මැතිතුමාත් ප්‍රශ්නයක් අහන්න ඉල්ලුවා මම හිතන අපි කාටවත් ප්‍රශ්නයක් නැහැනේ Please go ahead.
Listening to the conversation, I think what the governor and the team have done in the last 2 years is exceptionally great, because we were in a really bad place and we lived through it and saw it. And I think we are not understanding this inflation thing, right? Inflation is the worst tool that can make people poorer and miserable. And if you are thinking about saying, why are you not getting to 5%, I mean, we are stupid to try and tell that, that's a target. And if you allow him to go to 5%, 5% is too high in my opinion.
My
When
opinion
Honorable
too.
Ranil Wickremesinghe's government set it at 5%, I can remember I clearly spoke in Parliament and said that we should set it around 4% or 3%. New Zealand has 3% as its inflation target, because 5% plus or minus 2, he can go up to 7%. And you go to 7%, you can have runaway inflation. You might, as he said, 6 months later, bringing that down will be a nightmare. Right? Our exchange rate will go through the roof. We'll have huge problems. So therefore, I think what they are doing is, and I don't think it's a central bank's job to look at output targeting, right? Providing stability is their job. It's the government's job to talk about getting the economy growing. That's why there's government. So I think this inflation targeting, what they're doing is correct, and that what they're moving right now is not to let it go over. It will be worse for the government if inflation gets out of control. So people have to grow. How do you do that? There must be confidence. There must be political stability. People must feel that they can invest, and that is the thing that will drive the economy more than putting artificial pressure. So I think that we need to get all this together, because we made that mistake. Even in our government in 2018, we went and put pressure and played around with the interest rates, and our exchange rate dropped from 152, it went to 180 odd rupees within a month or so. So we can make mistakes like that.
Honorable Ravikant Naik, you had a question. Sorry. You-
There's any, I mean, the governor can clarify if there's pressure from the government on the side of the central bank to put down the interest rates or anything. I don't think there is any kind of pressure of that sort. Just that, the question still remains for me, if supply side factors are actually driving inflation, and if the government is going to, not necessarily bring down the prices, governor, but, if the government is going to control the supply side factors, which is very clear in your report as well, then the forecasting of the inflation that you are doing, it seems a bit I'm just questioning. This is a fundamental question that I have. So that's all I mean, if you can answer that.
Yeah,
that's,
no, thank. That's a good question. So, if I may, I think that's also related to what is the appropriate inflation target. Why we have 5%? If you look at our, say, index of inflation, consumer price index, in our part of the world, this kind of countries, the significant portion is still volatile supply side factors. For example, food prices is, I think, 26%, electricity and other are basically more close to 50% are the factors that we can't control using interest rates. That is the reason why this kind of countries, we have a high inflation, larger band, because no one can target inflation. The countries that have 2% inflation, if you look at the basket, is majority 70-80%, only 7-8% of food volatility would not have impact on headline inflation. Central bank has a better control in basically controlling inflation, headline inflation, because we have all responding to interest rates. In our case, only half respond to interest rates, half respond to supply side, where especially when there is a volatility of increasing, decreasing electricity prices, increasing, decreasing, where those rates, once if they are stabilized to a certain level, until then this volatility will be there. That is the reason why we come and explain here. I think that's a good point. I think that's why, I think your point, I agree, we need to have a, say, 4% target is better. Then we have to also mindful about, if you have to maintain 4%, then inflation is going above, we have to maintain a tighter monetary conditions for us to lower the inflation target. Monetary conditions will have to be much tighter, so that you'll have impact on the growth. That's why those countries see 2% inflation target are not growing 5-6%. It's only 3-4%. That is a compromise you need to have. There's a balance between the growth and the inflation. What is the right level of inflation
so
target
at the
for the country?
moment, the only option is to be accommodative of.
Yeah, I mean, this is 5% is, that's the key reason why we are coming and telling why we missed the target is largely controlled by someone else, not by the monetary policy.
Now, Governor, you had gone on record saying that at the moment we have not opened the vehicles up, no? So that will have a outflow probably maybe about between 1 to 1.5 billion depending on how the government utilizes that. So when that happens, the rupee will certainly have a shock. So then how do you reconcile your defense at this particular moment? You are defending your stand at the moment. And then you say, no, the rupee will depreciate obviously when you open out the outflow. So how do you manage that particular, because that will be also outside your purview?
No, I think this is why we have, close coordination is necessary, that we have been working very closely with the government, and we have done the analysis, and we have, from our responsibility, first one is to build sufficient resource to build up buffers in terms of foreign exchange resource.
Now, you have said
So-
that rupee will be depreciated to 305 to 315.
I haven't said, I don't think there's someone else coming.
not quoted
I never,
So I quoted you.
no, I had never given any, I mean, that's not central bank governor, anyone should not give any exchange rate target, because we all understand it's a flexible exchange rate regime that will depend on the demand and supply for foreign exchange inflows and outflows. So that will determine whether currency will appreciate or depreciate. I think in my personal view, right now currency has come to a level, it's appreciated because of the less demand we had, less import demand, high interest rates. That's why how this demand and supply factors have worked and stabilized the currency at that level. But going forward, if you look at the demand for credit, economy is recovering, obviously currency will have to depreciate. I mean, our responsibility is to, while allowing currency to move in line with demand and supply, but not to have a large volatility, have a smooth gradual adjustment through our interventions. And while at the same time we need to build our resource, because we still is low. So
How do you find the rupee? Do you find it overvalued because the exporters also are finding a problem at the moment because cost push has gone up?
Now this is where I think from the exporter side we are getting complaints from the exporters, mainly because of the expectation when last year exchange rate, I think 2023 exchange rate depreciated to 324 at some point. And then they place orders for exporters. They price exchange rate around 330 for their orders. Then exchange rate, because the market has a lot of pressure to appreciate, we build up our resource about 2.8 billion. Still exchange rate appreciated 290. So that obviously have an impact on the exporters in terms of their margins. 10% appreciation of the currency is not helping the exporters. They are complaining. Now I think that's why in my personal view, exchange rate has tightened enough. Is about competitiveness. Where, I mean, one benefit is that zero negative inflation has some impact, reduction in electricity prices has some impact, some relief for the exporters in terms of bringing down cost of production. Negative inflation, reducing electricity tariff has some benefit. That will set off part of the appreciation, but I think going forward for medium to long term basis, this is where I think the always people like currency appreciating. It's not the best thing for the country in my view. Need to have a balanced exchange rate which will basically support the foreign exchange earnings as well as control the cost of production. So otherwise, we don't want to maintain artificially exchange rate at certain level. I think this will certainly move around. I think that we have to accept the fact that exchange rate is a flexible exchange rate regime that will respond to demand and supply, and also the fact that currently rate has appreciated enough in my view. I don't think we should tighten further. That will have impact on the export businesses.
Do you find the exporters keeping the funds out? There is, in the Canadian Sri Lankan Business Council, they referred to 36 billion of Sri Lanka export money held offshore. I don't think that's right. But do you think as a central bank that there is a huge amount of money of Sri Lankans exporters overseas?
No, we monitor, we have a system. I think this was not there until 2023 July. Although I think 2017 with the Foreign Exchange Act, they brought in certain regulations, but there was no mechanism to monitor whether they are bringing money. There was a permission for them to repatriate, use their money, keep this abroad. They are also legally permitted that for a long period from 1994. And then this repatriation requirement was brought in the law, I think 2017 or 18. But 17 it was brought in, but there's no mechanism there's no mechanism to monitor by the customs or banks or even central bank. Now with the crisis, we introduced a mechanism. Now we are working with the customs and also banks and reconcile numbers and see whether they repatriate the export proceeds to the country. So what our finding based on the current monitoring system is they bring back 100%. But we allow certain percentage for them to keep in foreign currency accounts, for them to pay for imports. All these things, I think this is good for the business. Otherwise, we can't ask them to 100% convert and then reconvert for imports. So that is, historically that number, I don't, that is a different exercise. We can talk about it. That's
But in your perception, how much do you think is outside? Because this is also dollars outside.
No, I don't think anyone can, because we have given them permission to, it's not, if the exporter keep in money in foreign currency account, whether it's keeping here or keeping somewhere else, if that is permitted legally, what we have permitted is that the import demand, pay in the near future, pay for imports and pay for foreign currency loans if they have taken, they can keep that money in their foreign currency account. And right now they can't take that money out of the foreign currency account if they brought in. They can use that money to pay for those.
That is just Article 6 of IMF, no?
No, that's our current regulation.
Was only Malaysia that stopped it, but otherwise we were told to ensure that we give this particular one. So
that was 1994. That article, that relaxation happened in 1994. Current account relaxation
8.
for
Article 8.
Article 8.
Article 8 that is there.
Yeah, සේවසිංහ මන්ත්‍රතුමාට ප්‍රශ්න අහන්න කිව්වා. හැබැයි අපේ කමිටුවේ තව මන්ත්‍රීවරුන්ට ප්‍රශ්න අහන්න තියෙනවා නේ. ඊට කලින් අවස්ථාව දෙනවා. ප්‍රශ්න තව තියෙනවා. අපි වෙන මොකුත් අද දැම්මේ නැහැ. ඔබතුමාලා දීර්ඝ සාකච්ඡාවකට කැඳවපු නිසා.
Sorry, I'll ask one question before. The last time we asked you and pre-warned you, 1 rupee depreciation. Now you said that a lot of them like the appreciation because we are an import-led economy. So 65-70%, so that's why they like the rupee being strengthened. 1 rupee impact, how much does it have on the debt stock?
Remember, it's a very simple calculation. We know outstanding debt stock. It is, say, $40 billion. 1 rupee means 40 billion rupees.
40 billion for 1 rupee.
1 rupee. But again, so we have to mindful. We have to understand this. Increasing the value of debt stock. That's a stock. Is one thing, and the servicing the debt. Is annual payments is other thing.
Yeah, my question
So,
was
no,
depreciation of a rupee. That's what
Yeah,
I
of
asked.
course. I think that's what I'm coming in. Is that depreciation rupee has a positive impact on the government revenue as well. Import duties, excise duties. There is offsetting factors. Depreciation. When you look at the bottom line, look at the both positive side and negative side. On the flows, it's actually for the government. Depreciation by 1 rupee is net positive because there's a large revenue is linked to the rupee for all import duties. Say
But
some
net
motor
positive to the government.
Net positive to the government, yes.
Government, but not to the economy.
It depends on if you are exporter or exporter.
But I said economy, right? Honorable Sena Singh, you had a question.
And members also for letting us in for this meeting. Just to ask the governor, and you all done a commendable job, and I learned a lot today just by sitting here and listening to you all for about 1 hour. Since you said the monetary policy by you all and the fiscal policy keep it independent, is there any possibility, because these business people, they were paying, my friends who were paying 50 million interest, they ended up paying 150 million. So the banks are also, I believe they're asset rich. Sri Lankan banks, they sell a lot of properties for very minimal sort of prices when they have parat executions. Any possibility that you all can, because of this situation, that the central bank can propose to the government, studying the bank's assets also, because these business people are in dire need of, they're trying to survive actually, they're really struggling. Exception, I know it has to keep both areas separately, just to make a recommendation to the government, so government also can't, the minister also will appreciate it if
No,
as we understood, just to give a sort of a solution that some concession exception only for this to take, because the tools that you used actually more than the layman, you said the interest rates, you took it up, and then they are the ones who help to actually bring it to normal by paying a very high interest rate from 6% to 30%. So just to kind of accommodate them, since they helped also to revive the economy, just to consider exceptional circumstances so that you all can give a proposal at least, so the government can follow your.
Well, the thing is that, can the central bank give a proposal for a relief only to a small section of the community? This SME who has not been able to service their debt. Obviously, we understand the issue. That's where maximum what we are asking. And what you said, the allegation that banks are selling properties at a low prices. So we have a regulation and monitor the activities, valuations, all are very well regulated. I think if there's anything, people can complain. And give a relief to a certain section of the community, I think I would rather like to give a broad recommendation who are the most affected of this thing and who should be helped out of the taxpayers' money. That's why I think, in my personal opinion, first should go to the Aswasuma, and worst affected are the most poor with the inflation. That should be the priority for the government. First, support from the taxpayers' money should come there. I think that's a good program. And
Okay.
then if you have anything else, obviously it's up to the government to how to distribute, say, senior citizens or some other affected people should be given. But I think all I can say, this noise, obviously, people who make noises are people who have strong lobbying power. But people who wouldn't have lobbying power are not making any noises, but they are suffering. That's what you have to have a balance as a government. Here all these FT people are making noises are not necessarily people who are bearing the pain of the crisis. It's much larger community are bearing the especially poor people. I think that's, in my view, government should give priority to help them more than anyone else. First priority.
Okay, so